Good evening. This is the video newsletter for buysellshort.com for Tuesday, November 11th. A pretty choppy market today. Uh, was a holiday volume day for all intents and purposes. Veterans Day, bond market was closed, so a lot of traders were not in the market. Still, we saw 250 plus point sell off today. Then we were able to rally all the way back to slightly green on news of the government's loan modification program, and then into the last 30 minutes of the day, the robots showed up again and slammed the market down. Still, there are some positives in the market. We were still able to hold the 8,600 level. Here we have the Dow 15-minute chart. As I mentioned on Sunday, we're probably going to tread water for 3 to 4 days like we did back in late September before the market explodes higher. We've got options expiration in a week. So it's going to be time for them to wipe out the put holders who are up a lot of money in the last few days. Also, we've got the end of the hedge fund redemption window. That is on Friday. If we flip to the daily chart, one thing that is starting to form on the daily chart is a W formation, typically very bullish, especially on indices. Here you see the left side of the W where we've just formed the center part of the W, and if this plays out, then the following right side of the W should take this nicely higher into the 10Ks over the next couple of months. VIX continuing to stay really, really high. We're not going to see market volatility dissipate until we see a clear breakdown of the 50-day moving average. That's at 48 right now. Right now we're at a VIX of 65, which means we're going to move in a 600-point intraday move, which is pretty much what we saw today. We are down 300, went green, down 300 again. So until this breaks down, we're going to be at the mercy of these friggin' robot programs that are yanking the market back and forth. Quick mention on the put-call ratio. Mentioned this a couple of days ago. Actually, last week it got up to the 130 area, which was a sign for a rally. Then we saw a big rally on the open on Monday. We're getting up there again. We're getting pretty close to 120, which is usually a trigger on the put-call ratio for a counter move. So keep an eye on that this week. One of the big keys that I was watching today and mentioned in the chat room quite a bit was Goldman Sachs. Mentioned it in the video on Sunday as well, that if we are to rally, Goldman Sachs needs to hold its low. It actually broke below the 73 level yesterday. But today stock was in the toilet, selling off big time, got to a low of 67, 66.88, and then saw a huge reversal in the last hour and actually closed on its highs. Now, the reason this is significant, if you look at over the last couple of months since the market tank began, every time Goldman Sachs has gotten down to that 30 RSI, it's bounced about $50 to $60 each time. We didn't get the same kind of candle we got the last two times, but doesn't mean we cannot see a rally back to the 20-day exponential, and that is at 94 right now. So if you're in for some risk, you might want to consider some January $100 Goldman Sachs calls perhaps tomorrow, especially if there's some weakness. If we're going to see a big market rally, like I've said, we're looking for a move to 9,500 on the Dow. We're not going to do it without Goldman Sachs. So nice candle on it today. RSI's got a nice bounce. If we scroll back down, Stochastics also confirms a possible bounce coming in Goldman Sachs. One other thing to note today, even though we are down sharply and financials were a big part of it, the excuse today was American Express has decided to become a bank holding company. So, of course, the naysayer said, oh my God, things must be so bad. They are bad in the financing market. American Express is another company that needs or relies on short-term debt, and that market is broken right now. And all its competitors are going, have changed to bank holding companies, are using cheap Fed money. If these guys don't, or if American Express doesn't, they're at a competitive disadvantage, so they may as well. So that was a large part of the bank index being down today, the ETF, but many of the components were actually green like Goldman Sachs, so that is very positive for us near term. Hopefully we see some follow through tomorrow. In the Sunday video I said we would look for a turn on Tuesday or Wednesday. So let's see what happens tomorrow. We're looking for a turn tomorrow on the market. SMH kind of disappointing again today, but perhaps today was the bottom. So fingers crossed. Breakout is $20 on the SMH. Sent an email out today to possibly consider some DIA call options, the $94 to $96 DIA call options, and the QQQ January 32 calls. Market move, ETFs will move the biggest and the fastest and give the best gains right now. Stocks are still selling off even when the market rallies, and then tanking when the market drops a little. So we're going to stick to the ETF focus, and hopefully we see a gap tomorrow. There was some nice paints at the close today, and every time they've done that recently, they've gapped and rallied us the following session. So let's see what tomorrow brings for us. That's it for the video tonight. I'll see you guys in the chat room tomorrow. Good night.